Hi, good morning, everyone. Welcome to our ad hoc CIO series number 21 on Trump's tariff announcement this morning at 4 a.m. As you know, starting last CIO series, we offer live translation of closed captions. So I will walk you through how to do that in Chinese. 在这个界面的右上角，你会有一个Microsoft Teams 的这个控制栏，有一个三点的一个选项，更多动作，然后选择打开这个语言和转译，或者是这个字幕一下，我不知道这个实际是什么一个状况。然后右下角会出现一个小的屏幕。再去选择你所需要的语言，而且你必须使用 Microsoft Teams 的应用程序，在网页上是实现不了这个实时的翻译功能的。Okay, with that, let me turn to the main content for today. What Trump said this morning, obviously, it's very important. What he did was confirming this 25% tariff on autos will be effective Thursday, today. And here you can see the countries that be most impacted by this change. And on top of that, he also announced higher than expected reciprocal tariffs, which vary from country to country. The minimal is 10%. In China's case, it's one of the highest at 34%. Canada and Mexico are exempt. As far as I know, certain products like copper, aluminum, and semiconductors are also exempt. And I'll ask Paul Davino to walk through the details of this announcement later. But let's take a quick look at the market movements following the event. Almost all markets are down except for gold is up. And gold is being very strong in recent years because of geopolitical risk, and now look like it's having a positive response to the tariff risk as well. Paul, I'm going to turn to you to talk about the U.S. Treasury market. And Paul is our U.S. market strategist based in Singapore. Paul, you there? Hello?
Okay, so if you were like watching it live, you would have seen Trump begin to speak, and immediately it became apparent. I don't know how people figured it out so fast that the tariffs were going to be larger than the market expected. And the equity market sold off right from the get-go. And of course, that did gather up steam while he was speaking. And the treasury market rallied, meaning bond yield, treasury yields went down. But you wouldn't say that the treasury yields went down by a lot. It was just sort of the normal price action that you would see on a weekday for the stock market. The tendency is for bond yields to go down as well. But then as it kind of went on, you had this very big drop, which you can see there with the 10-year, and the exact same thing happened with the 2-year in the treasury yield. And when it's a big drop than that, that's more than just people shifting from equities into treasuries. That is the market starting to say recession risk is going up. And especially with the 2-year yield at one time, I think it's down roughly the same as the 10-year now, but it was down like 15, 16 basis points. The only way the 2-year, you can say the 2-year yield drops is if you're expecting the Fed to cut rates more, because that's such a short-term instrument. And the only reason the Fed would accelerate their plans for rate cuts is if the economy was going to slow down, right? Because clearly the tariffs by themselves without a slower economy is not going to make inflation go down. So the answer to all this is if your takeaway from the treasury market is that the recession risk has gone up a lot, and the market currently assumes that if you do have a recession, it will ameliorate the problem with too high inflation in the United States. A recession will just kill the inflation off very quickly.
Yes. And then if you look, so basically the bond investors are telling us they're expecting recession, higher risk for recession in the US. And here is today's Asian market performance. Almost all of them are down a lot. Taiwan, Indonesia on a holiday. So nothing new to report on that. And to continue on, I also have Mon Hong, our head of Greater China Research, to talk about the China market later.
Yep,
Mon Hong,
thank
thank
you.
you.
Yeah.
Thank you for your time. And I was saying yesterday, there are two overhangs ahead. The first is this morning's announcement. The good news that the announcement happened. The bad news is the announcement was worse than expected. And more importantly, going forward is what the individual countries will react, how they will react to these reciprocal tariffs. Paul already talked about the Fed. So Paul, maybe you can talk about your thinking about what are the possible responses from the countries that are affected by this.
Yeah. Well, each country is going to have, or each group is going to have their own individual calculus of what to do. And of course, their own politics will have something to do with that reaction. Some politicians will feel like they have, elected officials will feel they have a need to show that they're strong and standing up to the US, some less so. So, what we expect to see is a variety of different responses. So with Canada and Mexico, of course, they got off very lightly on this because the USMCA trade exemptions stay in place, right? So they didn't get that much. US is such an important market for them. It would seem that doing anything dramatic in order to rile up and escalate the trade war would be counterproductive for their interest, and they need to go back. The other thing, when you're seeing the amount of tariffs, why it differs from each country, is that the Commerce Department had done this big study, and that's not just, as Trump put it, the tariffs that these countries put on the US, but what this study indicates is the value of the total barrier to US exports. So a lot of these countries may read how the US determined what the tariff should be, and they'll say, well, we can ameliorate that, and they'll go back to the US and try to handle that. So what we would
not necessarily retaliation. There could be room for negotiation. Is that what you're saying?
Exactly. And although Trump, part of his deal is to be Mr. Tough Guy and not talk about negotiation in the speech, Mike Johnson, the Speaker of the House, and I think another one of the senior senators immediately brought out and said, this was a great speech by Trump. It shows, like we're putting out high things, and all these countries will have an opportunity to, react so we can get the tariffs down. So clearly, this is whether, Trump didn't say that, but the messaging from other people is, there's an opportunity to address this. And when I brought up that distinction between the actual tariffs these countries have and what was presented in that big book that Trump waived at the beginning, is a lot of that calculation is pretty fuzzy. So if you're saying that the barrier is 20% due to some fuzzy stuff, if you want to get it down, the country can come back to you with some fuzzy suggestions and you can reduce it by that much, if you follow what I'm saying.
Yes.
It's pretty easy to negotiate based on the way they went about determining those tariff levels.
So just to recap, as scary as this tariff sounds, there's some silver lining. One is, like Paul said, there's some room for negotiation because the tariff book that Trump put forward was very vague to begin with. And also remember, percent said that this is going to be the ceiling, right? Not the floor. So this is probably the worst case scenario already. And now the countries may retaliate or they may also negotiate. So not necessarily ending up in the all-out trade war. Obviously, what China will do is going to be very, very important to the world and also to us as investors. So with that, let me turn to Monhan to talk about possible reactions by China.
Yeah, thanks, Chi. Yeah, I think for China this time around, it's not as negative as before because you can see that Trump has also imposed pretty hefty tariff on other Asian economies as well. So you're not going to see a lot of trade diversion at the expense of China. So that's one positive. And two is that, of course, there has been recent discussions between, let's say, China, Japan, and South Korea that they'll have a more free trade amongst themselves. And so there is an alternative to the US market. So China could actually have some cushion from this impact from the US. But I think what is also key is that, like what Paul brought earlier, Trump also does have this tendency to go for a quick win, to show some quick, easy victory. And I think China probably would retaliate first, again, to raise the stakes and then negotiate with the US. Exactly what Trump would do, raise the stakes and negotiate. Because I think we've done some earlier studies. You can see
next one, right?
Yeah, you can see on the slides, one more, that a lot of these Chinese exporters to the US, they have gross margins of about 15 to 30%. They're definitely not going to survive a tariff rate of about 60%, right? So China definitely has to come to the table to talk to the US, but the upside is that the US still depends on China for a lot of consumer goods. There's not going to be any alternative supply chain at the moment, and also, like I said earlier, the US has also increased the tariff on Vietnam, on Cambodia, Malaysia, Indonesia. So things are definitely not going to get cheaper for the US consumers. So from that perspective, I'm not particularly worried about China at this point in time. In fact, I think any pullback now, it will be a good window to buy on some of the structural growth names or sectors that we missed out earlier. I think this is actually pretty good that a lot of uncertainties is out of the way currently. Yeah.
And speaking to earlier, I think you also very early in the thinking that when you set out the strategy, China's strategy for 2025, you already priced in or forecasted some of the tariff risks. Can we talk about any changes to your thinking, how we should be positioning China, or maybe give us a recap of what's your China strategy for this year, or at least first half of this year?
Yeah, since we came up to report end of last year, I think we have been quite clear that we are positive on the domestic demand story. We think that this is one of the key growth drivers for China. At the end of the day, no matter how much you talk about manufacturing and export, China is actually pretty much a domestically driven economy, right? 80% domestic demand. So we have been recommending names like Trip.com, Tencent, the Say, which is riding on the smart EV trend. Names like that we think would benefit from the structural growth in China. Xiaomi as well. Look at the growth of the EV business that Xiaomi is benefiting from. But I think in this pullback, what we can actually do is really look at some of the names in the AI automation names, tech hardware, which has gotten pretty relatively expensive in this run up we saw in February. This pullback might provide you a good window to accumulate on some of these names. I think that's what we should do. Yeah.
I'm looking at these names, the 5 picks. I see a lot of domestic demand stories. We also like Trip.com as a beneficiary of the domestic and cross-border tourism boom in China. That seems to be a secular growth theme that will go on for a while, regardless of tariff or not. And then just to share with you some Wall Street research on the same topic on US and global investing. Goldman Sachs had a report recently asking their investor to insulate themselves from the tariff risk. Obviously, even a smart firm, a leading Wall Street firm like Goldman could not figure out exactly how this tariff will work. Even after the announcement, I think there's still a lot of uncertainty. So what Goldman's suggesting is asking their clients to move away from these economic sensitive stocks as much as possible. On one hand, Goldman has lowered the GDP forecast for the U.S. recently, as you may know. On the other hand, they're using quantitative methods. They came up with these U.S. stocks less sensitive or has very little correlation with the GDP growth in the U.S. Morgan Stanley wrote about the mitigation strategy, very similar to what Goldman did, but using more fundamental research as opposed to quantitative tactics. So here, Morgan Stanley, based on the pricing power of the company, their positioning in the world, and a collection of total 5 factors to come up with a list of the stocks that they believe can better navigate the current environment and the current trade tariffs. And we very much think the same in our U.S. model portfolio, as we've been telling investors that in the U.S. we are vigilant, but we're not necessarily bearish after the correction on the NASDAQ and S&P year to date. And as you can see in our current U.S. stock model portfolio, we have a combination of AI investment themed stocks, which also are less, I believe, fundamentally less sensitive to tariffs, and also stocks like Walmart and energy, oil, and gas stocks that may be more defensive in the current environment. And if you guys have any more questions, we can certainly talk more about that during the Q&A section. Before we turn to Q&A, Paul, do you have anything to add on U.S. strategy, please?
Yes, I think, when I first started, I was talking about how recession risk, like my takeaway from the market and the treasuries was recession risk has gone up. And another way to see that is by looking at the bank stocks. So if you think about it, banking in the U.S., it's a domestic operation. It's not really hurt by tariffs. Even international banking is not hurt by tariffs in any way. Yet the bank stocks are dropping right along with the market. I think like JP Morgan is down about 3% in after hours, maybe not quite that much. So what is that telling you? It's, once again, you could either say, oh, it's just being dragged down with the market, or it's telling you that the banks are dropping because of recession risk going up. And of course, recessions are not that good for banking. We haven't been recommending banks. Of course, lately banks haven't been so great, but since the second half of last year, they were certainly doing very well. And if banks continue to fall on this recession fear, that would be an opportunity maybe to start accumulating banks. Since we missed it the first time around, we might get a second chance to jump in. Another way you can illustrate the way this recession might work is, a part of the Trump speech, which isn't really that new, so it didn't get much press. But when he was speaking, he talked about how these tariffs, with all the money that they're going to collect, this will allow, Congress to extend the tax cuts, which he wants, the personal tax cuts that are due to expire. He referred to the bill. He said there's some other things that are going to be worked into the bill, which are going to be very good. And in Trump style, I think he described it as the greatest bill ever written. But to get to the point of that is it's kind of illustrates how this thing hits. Like you say, oh, it's going to hit consumer, if you're buying consumer items now, the U.S. has just gone from an average tariff rate of 2.5% to 20%. So people are clearly going to have to cut back on spending on some things if prices jump quite a bit. But you can see if they're going to do a tax cut, that benefits the higher earners. And you can kind of see that, like Visa, right, which the people who have Visa cards earn more money, in after hours, it's dropping a lot less than the banks. So the combination of if consumer prices and other things go up, that's not a huge impact on people with money, and they'd much rather have their income tax cuts. And that's why businesses that cater to higher income people are going to do better. And I'll just leave it with one last point: is Trump also talked about making interest payments on the purchase of American-built cars tax deductible. So once again, when I was young, this is a sign of part of the reason Trump got elected is a sign of the decline of the American dream. The average person could buy the average new car in the United States. That's no longer true. Only people who are in higher income people in the United States can really afford to buy new cars. So once again, that's a big benefit to the higher income people because they'll be able to buy Teslas, which are the most American made cars. Interestingly, like Hondas and Toyotas are also very American made in the United States. And when they buy those cars and they get a loan to do it, they'll be able to save on their interest payments.
What is the conclusion on that? The last point?
Well, the broad conclusion, without going into, I mean, actually, that's a good thing for Tesla, but the broad conclusion is that the combination of putting taxes on goods coming in, which hits everybody pretty equally, rich people and poor, and on a relative basis, much more costly to people who earn less money, and the tax cuts, which have a huge benefit, obviously benefit the people who earn more money. So the top 10% of earners in the United States are going to come out as winners on this. And any business that caters to the top 10%, like a Tesla, Tesla has other problems, but any business that caters to the top 10% of earners is going to come out as a winner.
Got it. Okay, with that, we promise to offer plenty of time for Q&A. So we're ready to queue up for the Q&A. Before that, please remember to subscribe to our Wealth Vision YouTube channel, which will include today's replay as well as our past CIO series. And from time to time, you will also get some video updates from Paul Davino, who's on the call today, about the US market, about Trump. I'm sure going forward, there'll be plenty to cover based on what we discussed today, the country responses, and any subsequent action by the US government on trade policy. With that, we open up for Q&A. If you have a question, please use the chat window or the Q&A button to type the question. We'll answer them in order that they come in. The first question is on the view on the upcoming earnings season and what we should be look out for. I'll start first, and then Paul, maybe if you have any things to add. So assume you're talking about the U.S. earnings season that will kick off, I think, mid-April with J.P. Morgan earnings. I think first quarter might be okay. I don't think this U.S. recession risk will kick in yet. What's more important is the guidance for the second quarter and the remainder of 2025. Again, first quarter earnings might very well be okay. What we need to be watch for is the company's comments on this tariff risk and the guidance. And also, don't forget the U.S. dollar risk to U.S. corporate earnings. A lot of these companies have international exposure, and certainly a strong U.S. dollar is not good for U.S. corporations. We already saw that with companies like Microsoft in the first quarter. Paul, any thoughts?
Yeah, I think, we've seen from the start, if you're looking at the FactSet data, analysts have been reducing their estimates for individual company earnings at a faster than normal pace for the first quarter. And I think that's a case of them also being conservative because they're reacting to the headlines. And so my inclination is that they're probably injecting a little bit of broad stuff rather than looking at their individual stocks into their estimates. And you're got to see companies, U.S. companies are got to just like in the fourth quarter, they outperformed enormously. You're probably not going to have that again where they outperformed by 6 or 7%, but you're going to have pretty strong outperformance versus estimates on that first quarter results. You're going to come pretty close to 10% year-on-year growth. I think it'll be probably between 9 and 10%.
Yeah. Second question is also maybe for Paul. Any of our view on the 10-year U.S. Treasury yield going forward?
I think that this has been a very hard thing to predict. With a lot of ups and downs. Everybody talks about U.S. financial markets being volatile. Actually, the equity market has not been that volatile, but Treasury market has been more volatile than normal. But I think the broad trend with a lot of ups and downs, so you have to be careful when you're doing stuff, is that the trend to the yields will be lower.
Okay, again, if you have a question, please use the Q&A function on Microsoft Teams to enter the question, and we will answer them in order that come in. And while we're waiting for more question, I have a question from Monhan on any view on the RMB currency and how that will impact our investment strategy in China.
Yeah, I don't think China would resort to a weaker yuan in the near term, because you've seen that even with the recent slight depreciation, the RMB on a trade-weighted basis is actually relatively stable. The thing is that a lot of these Chinese manufacturing are tied to the global manufacturing chain, so a weaker yuan doesn't necessarily bring them greater competitiveness. But even if they do decide to take some pain off the SMEs with a weaker yuan, I actually think that it's actually not bad for China, because at this point in time, you do have pretty weak inflationary pressure in China, and a weaker yuan bring high imported inflation might actually help move things along and help with some of the pricing for the some of the domestic manufacturers. So overall, I don't see a key risk of a major yuan depreciation from that perspective. Yeah.
Got it. We have a question on Apple, and look like today's tariff is not just hitting China, but also a bunch of the countries that Apple is making iPhones and other products in. So the Apple supply chain in India and Vietnam are definitely impacted by today's announcement. Is Apple the worst positioned among M7 from these tariffs? That's a good question. It's really hard to say. Apple's not just a hardware company. A significant part of the revenue now comes from software and services, and now also AI. Even though Apple is a bit late in the AI game, I think they have great potential in terms of edge AI and now a new thing called AI agent, both very early stage, and with Apple's $4 billion user base, 4 billion users worldwide, and 2 billion iPhone users, they have tremendous potential in developing these technologies and push forward what we call the consumer AI space. Yes, in terms of these tariffs, it may involve Apple making some supply chain strategy changes. We just don't know what they are yet. So regarding the earlier question about the U.S. earnings season, I said earlier that we need to pay very close attention to companies' comments on these tariffs, how they will respond. And by the way, none of them, I don't think, have ever lived through something like this. Even Warren Buffett had never seen something like this, and he's over 90 years old. We never seen a wide-reaching tariff like what Trump announced this morning. Okay, any other questions? If not, I want to first of all thank Monhan for your take time, busy schedule to talk with us, and China's be a very important part of the puzzle. Paul Davino always do a good job of tracking what's going on in the U.S. and give us timely comments. And I just, again, to remind everyone, we are living in a very uncertain time now, given today's announcements. This is only the beginning, not the end. The next thing we should be closely monitoring, in addition to the U.S. earnings season, is really what the individual country is going to do about this. And we'll keep you updated. Thank you. Thanks, everyone.
Thanks, everyone.